US cents.
Well, to tell us more about what's been making headlines in finance and economic news this week, we're talking with Suzanne Haddan, who's the Managing Director at BFG Financial Services. Suzanne, thanks for coming in. A whole lot of red there on the markets.
And yes, fasten your seatbelts, ladies and gentlemen.
Well, what's behind it?
Well, there's a couple of things. The trade war is still playing on people's mind. Is it going to be a war? Is it going to be a management of trade? But then we had the announcement that Canada might extradite the CFO of Huawei, who is actually the daughter of the founder. So they're worrying about ruffling China's feathers and what might happen. And so markets are very nervous.
Yeah, so what are the implications of that arrest? It's certainly, there's concern. We've seen this play out in Australia, that the stance that the government's taken about Huawei. So more broadly, what's the context?
It's certainly sending the message around the world that there are concerns about that company. And if there's any strong evidence out in the marketplace for us all to observe, it could be the start of the end for them around the democratic world.
But also the chance of retaliation from China?
Well, we've had our own executives from BHP arrested over the years, so I think that is absolutely on the cards. But it just doesn't set the scene for negotiation between Trump and China. So that unsettles the market. They don't know which way to go. It's all over the place.
And as the rhetoric around the trade war escalates, how resilient has the market been against that rhetoric?
Well, the US market is down 4% roughly over this week, and only slightly positive for the year. But you look around the world, most of the world dominant markets are down for the year. So why is US being so resilient, and are they realising that their concerns are greater than they might have first thought?
Let's come back home. Now, it's been described as surprisingly weak GDP figures that we saw released this past week. And that's led to some really interesting comments from the Deputy Governor of the Reserve Bank.
Yes. So I believe what they're doing is setting the scene for the possibility, I don't rate it highly, but the possibility of a rate cut. Because
let's emphasise that. Cut, not hike, because we're talking about the next move being a hike.
At 1.5, to think we might go down to 1.25% is just amazing.
Yep.
But we're seeing property prices drop around the country. There's a few exceptions, but generally are down, and that's causing concern.
It's interesting. There are different circumstances with this slump than we've had in the past. How does it compare to housing price slumps that we've had in the past?
Well, think about, you won't remember, but the 1989 slump, we had 17% interest rates. We've got record low interest rates. We had high unemployment, over 6%. We're at 5%, so that's what's got them concerned. I don't think the Reserve Bank are unaware of the circumstances. They're just warning us that the game may change with interest rates.
And a lot of this, of course, has been put down to the tighter regulations as far as lending is concerned.
Yes.
And we're likely to see that even tighter regulations coming forward. A couple of banks flagging that they're going to take a look behind the scenes of everyone's balance sheet at home to see exactly what they're spending their money on, whether they can afford a loan.
Which is a good thing.
Yep.
But when people can't get a loan, property prices will correct. What you want to have a look at is your financial hygiene. Before you go for a loan, make sure you haven't got your afterpay docket still outstanding. Make sure you haven't got credit cards with $10,000, $20,000 limits, and check your credit reporting. You can do that every year for free and see what others are saying about you.
Goodness, is that a term we're going to hear? Financial hygiene?
Well,
I introduced it today and I thought it was a good one.
Yeah, I think it's a good one. But isn't that what the tighter regulations are all about? The banks kind of doing the financial hygiene for you and investigating further? Or is it up to you to do your own
Well,
financial
they'll be like
hygiene?
forensic accountants.
Yeah.
Talking to the banks myself, it's taking extra days just to look at a loan. But it is your responsibility.
Right.
You need to have a safety net. You need to check your spending to make sure they'll think you can afford the loan. And I just don't want you to have a 3-month rush to fix everything and get your bad habits again. It's a long-term strategy.
And the biggest risk is still those interest-only mortgages. How big a risk is that, and what will we see over the next few years in regards to those?
Yeah, so they're the existing borrowers.
Yeah.
So they'll be coming off interest-only next year and the year after. Escalation in repayments, 35%. Could mean they might have to sell their properties. Not a good time to do so in many places.
Because that's normally a 3-year term loan, isn't it?
3 to 5 is the norm with interest only.
But once again, the lenders have really cracked down in that sector, so it's much more difficult to get an interest-only loan.
It is very difficult. I suspect they might be trying to leave the window open for the really stressed borrowers to stay on interest only. But you're going to be assessed under a new environment. You'll be assessed, can you afford it at over 7%, even though rates are 4%? And under the new interrogation of your financial statements and how many cappuccinos you have in a day, it's going to be a problem for some.
But they were more geared towards investors rather than owner-occupiers, were they not?
They were more geared, but the real problem ones are the home loans because they're often interest only to get you the highest borrowing, the best property you could in the preferred suburb, which is not always what you can do or should do.
Indeed. All right, Suzanne, thanks for coming in this morning.
Great to see you.